Hello friends, welcome back to Gogood Academy. Today we are going to start a new series that is banking awareness, and friends, we are planning to bring more than 200 videos on such topics that is banking awareness, so you need to stay tuned. Let's go today's topics. So friends, today's topics is assets and liabilities. Friends, assets means yield or income. Okay, lending activities is the best way for bank to earn incomes. If if banks lending more lending activities are occurred, then the income of bank is more. What do you mean by lending activities? Lending activities means like personal loans, corporate loans, mortgage loans, housing loans. These all are generate interest for the banks. So that's why we call it as an assets for the banks. That's why these are called assets for the banks. Okay, if we are going to on the other side, that is liabilities. Liabilities means cost of funds. Okay, cost of funds. Liabilities, customers deposits are liabilities for the banks, because amount deposited by the customer in the banks get interest for the respective amount. What amount you deposited in the banks, with respect to that amounts you get the interest. So all deposits are the liabilities for the banks. Okay, next, here, if in such topics, that is assets and liabilities, which we come out and another terms, that is NIM. Okay, NIM stands for net interest margin. What do you mean by net interest margins? The gap between assets and liabilities is called net interest margins. Okay, if, for examples, if a bank charges 9% interest rates for loans and gives 4% interest for the deposits that lies with the banks, then here's 9% minus 4% equal to 5%, and this is the profit for the banks, and these 5% is the net interest margins for the bank. Okay, so if if we if we analyze the present scenario, then 3% or more than 3% considered as the benchmark for profitable banking operations. Okay, in recent times, some private sector banks and SBI are able to achieve 3% NIM. Okay, but if we are going more than more public sector banks, most of the public sector banks are struggling with NIMs of 2.2 to 2.7%. Okay, so a bank should reduce the cost of fund to get high net interest margins. If a bank wants to increase their net interest margins, they should reduce the cost of funds. Okay, so for today, this this is the topics which covers, that is assets and liabilities and NIM. Okay, thank you.